Hey everybody, hope you're doing well. I want to talk about why the majority of traders end up losing money in the markets. And that's often because they're trying to be one step ahead of the trend, but instead of being successful, they end up being not one, but two steps behind the market trend. Now, what does that mean? How does it happen? Well, we'll go through some examples, including Bitcoin, Ethereum, Cardano, we'll look at Polkadot as well, and Chainlink. Now, to make matters worse, being two steps behind is actually a salvageable situation, right? You just need to hold on to your position. But the majority of traders end up panicking out of emotion, causing them to ultimately buy high and end up selling low, right? This is statistically why most people lose money in the markets and would be better off investing and not trading, right? So trading, it's a zero-sum game. The majority of profit is made by smart money, right? The relatively small number of institutional investors and savvy retail traders who are able to keep their emotions at bay and consistently execute a strategy over and over, right? Smart money is able to play market psychology to their advantage at the expense of those who can't. But hopefully by the end of this video, you'll have a good idea of what to do and what not to do. All right, if this sounds interesting, I'd appreciate a like and a subscribe, and let's dig in. Okay, so this problem of trying to be ahead of the trend, but ending up being caught behind with your pants down, typically manifests in two ways. The first way relates to bad entry and exit timing, right? So let's look at Bitcoin as an example. Well, being one step ahead of the trend means buying during accumulation periods, right? When the markets are actually at peak fear. Right, now we had this opportunity for several months between May and July as Bitcoin hovered between $30,000 to $40,000. So here, smart money continued to accumulate more Bitcoin at a massive discount, mind you, right? After selling their $60,000 Bitcoin to overly enthusiastic retail traders who took the fall when Bitcoin crashed hard in May, right? It was truly heartbreaking. So here and here and here, this is when you want to be buying and accumulating Bitcoin, right? Not here, not during periods of peak greed. These are low probability trades. You want to be taking high probability trades. Okay, so say you missed the opportunity to get ahead by not buying down here, right? That's okay, right? Bitcoin starts pumping, and then maybe after a while of sitting on the sidelines, you finally get in with some positions, right? You're technically speaking You're going to be one step behind smart money, but that's okay, right? You're riding the wave, you're still making money, it's fine. But what you don't want to be doing, right? What you don't want to find yourself in is being two steps behind, right? So getting in during peak FOMO when there's going to be significant sell side pressure from those who got in down the bottom here, who are now 50 to 70% up in their Bitcoin positions and wanting to take some profits, right? Now, if you do find yourself two steps behind, right, where you buy in and oh my God, the prices start dumping, the trend is reversing. Oh my God, have I made a mistake? A big mistake. Am I screwed? And the answer is no, everything's fine. You just gotta hold, right? Bitcoin's not going anywhere. No one who has ever held Bitcoin over a 4-year period has lost money, and that's the worst possible scenario, right? But instead of holding, many of those who FOMO'd in during peak greed end up selling low to smart money who are now accumulating in anticipation of the next pump, right? So this is how you end up buying high and selling low. It's that emotional and human urge to FOMO in just a bit too late, right? And then panic sell when the trend swings against you. That's ultimately why the majority of traders end up losing money trading and will be better off just dollar cost averaging and investing in good projects. So in summary, right, you want to buy during accumulation zones, buy when the markets are fearful. You want to get ahead of the trend. And if you do find yourself getting caught two steps behind, just hold because prices will eventually recover, assuming you're buying into a good project. And if all of this is too hard, no worries, just invest. Don't trade, just invest, right? Buy regularly and forget. All right, moving on. Now, a second and similar way in which traders often find themselves getting caught two steps behind is when trying to rotate profits from one cryptocurrency to another one, right? So examples include rotating profits from Bitcoin to Ethereum after Bitcoin's had a nice good pump, or more generally, rotating capital from Bitcoin to the altcoin space which you can help anticipate by studying the Bitcoin dominance chart or the altcoin dominance chart. Now, another good class of examples involve looking at how profits rotate between similar types of cryptocurrencies, right? So those with similar use cases. So for example, right now there's hot competition between Ethereum and a lot of up and coming smart contracts protocols. So we've got Cardano, Polkadot, Solana, and Avalanche, for instance. We'd like to look at the price of these against Ethereum, as they tend to pump at different paces, and experienced traders know how to rotate profits from one to another to maximize profits. Alright, so let's look at Ethereum versus Bitcoin first. So here, being one step ahead of the trend would mean identifying moments when Bitcoin has been running a little bit too hot while ETH has yet to catch up, right? So times like here, here, and here, right? So that's when ETH is undervalued against Bitcoin. Great time to take some profits off your Bitcoin position and rotate these profits into Ethereum. Now, if you do this, say a couple of weeks late, right? Now keep in mind these are weekly candles. So if you rotate profits a couple of weeks too late, that's okay, right? You'll be one step behind, but you're still riding the trend, right? You're on the right trend. But what about 2 steps behind? Well, they correspond to moments here, here, and here, where you wait a bit too long to rotate profits, right? You end up getting in just when the ongoing trend is about to reverse, right? So imagine waiting months to sell your Bitcoin, to buy Ethereum, only to see the Ethereum prices begin slowing down or perhaps even dumping, right? And Bitcoin pumping really hard again. That's what 2 steps behind looks like here. All right, moving on to ADA versus ETH, right? Cardano versus Ethereum. Well, since March 2021, ADA's price has essentially been oscillating, right, around roughly 0.06% of ETH's price, right, with large swings, right, coming in at important upgrades such as the Mary hard fork, which allow developers to deploy their own token on Cardano, similar to how there are thousands of ERC20 tokens deployed on Ethereum after their own upgrade years ago. And the Alonzo hard fork, which introduced smart contracts, very bullish, right? So both updates are crucial for DeFi on Cardano. Now, being ahead of the trend here means rotating ETH profits, right, into Cardano, here, or here, or here, right, when ADA is quite undervalued against Ethereum. Now here, being one step behind the trend means you're doing this capital rotation when ADA has already begun pumping against Ethereum. Right, so here you've missed the best opportunity, but that's okay, you're still going to be joining the right trend. Now, if you're 2 steps behind, that probably means you're FOMOing into ADA at sky-high prices, right? Probably near the hard fork mainnet launches, which are usually accompanied by corrections. Right, as they say, buy the testnet and sell the mainnet. But as we saw earlier, if you are 2 steps behind, look, it's not the end of the world, you just gotta hold. Right, in fact, if you jumped into ADA around here when it had pumped virtually 100% against Ethereum, it basically means you jumped into ADA when it was around $3.20, right? But that's okay, just hold. ADA is a fantastic project. In a few years' time, a $3 ADA is going to be seen most likely as an absolute bargain, right? Not a problem. Alright, finally, just a quick look at Polkadot and Chainlink. Now, I've been saying for a while now that I think they're both quite undervalued against ETH. Now, DOT has already begun pumping a bit against ETH, but it is still a decent buy. If you look at Chainlink, clearly undervalued against Ethereum. It has been for a while, right? But you'll find that the majority of traders at the moment who are trading the layer 1s competing against Ethereum, they're probably busy joining in on the pumps on Sol and AVAX. Right, there's a lot of action going on there at the moment. Nothing against Solana and Avalanche, I think they're both terrific projects and I've done deep dive videos on both, which I'll link above and below. But hey, if I were forced to pick a place to rotate profits to right now, I would argue that Polkadot and Chainlink are higher probability trades. Alright, so in summary, the ultimate goal is to get ahead of the trend. Right, that's how you make the most amount of money. You got to spot the opportunities before everybody else, right, has jumped on it. Now, this can be hard. Right, if you miss the trend, that's okay. You might get in just a little bit late, but you're still riding the trend, which is okay. But you don't want to join in on the bandwagon too late, right? Especially with leverage, right? When the trend's reversing just as you jump in, you're now 2 steps behind. And if you do find yourself in this situation, look, it's not the end of the world either. Just hold, and provided it's a good project, which in this case Bitcoin is, you'll eventually be in the green, right? Even if you bought all the way up here. Until you sell, look, you're only looking at a paper loss. It's all right. Now, if you do end up selling lower, it should be because you have a better use for the capital, right? Which is fine. But unfortunately, that's not the case. We find that the traders who lose the most amount of money are typically those who they FOMO into pumps too late. They then panic sell, resulting in less money than they started with in their accounts, right? Then they FOMO into another pump, perhaps even with leverage to try and make up for the money that they lost earlier, right? So you can see how this results in disaster. You're basically taking low probability trades over and over again, right? Instead, you need to reverse all of this. That's the key. You want to reverse all of this. You want to buy during peak fear, right? When the price is in an accumulation zone, right? You want to take profits on the way up. Now, where should you rotate these profits? Well, into another cryptocurrency that's in an accumulation zone, and then rinse and repeat. And that's how you slowly build up your portfolio. And finally, if all this is too hard, then no worries. Just dollar cost average a bit of your regular paycheck into a variety of good projects, and statistically, you're going to be more profitable than the majority of swing traders and the vast majority of day traders. Alright, that'll be it for today. I hope you got something out of this video. If you did, I would appreciate a like and a subscribe. Have a good day or evening wherever you are, and I'll see you in the next one.